Welcome to a new update. Today we're going to have an update about the price action of Bitcoin. 2 weeks ago we had the ETF being approved, and since then the price of Bitcoin has been correcting. So we're going to look at what we should be focused on in terms of the price action, in which we can expect some momentum to take place at some point. Why are we actually correcting at this point? Can we assume that from here the price action is going to rally again, and which levels are we looking at in terms of a correction? Because we were establishing a certain range for the price action of Bitcoin for some time. We mentioned that it's very likely that we're going to hit $48,000, correct from there, look at a potential retest at lower levels, and from there we can start moving upwards again. And most likely the ETF is going to capture a lot of the, I would say, halving hype, which we technically have seen as well. And the halving hype is probably not going to be as big as we expect it to be. But in the long term, it is going to be as big as we expect it to be, or even bigger, because I think we are overvaluing the ETF in the short term, and we are undervaluing the impact of the ETF in the long term. So we're going to discuss those topics, and I'm going to explain what I think about them. But before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also make sure to follow me on all the platforms. You can do it on X, you can do it on Instagram. Doesn't cost you anything, liking the video either. I'm trying to give you my view on the markets, providing you with content that I think is valuable for everyone. It's maybe a little bit a shorter update this week, as I've got a slight business trip that I have to make, which took a bit more time than anticipated, but I'm still here providing you with an update. Next week we're going to dive into the altcoin portfolio. For instance, if you start a $1,000 altcoin portfolio, what should you be doing at this point? How can you build one? How can you manage one? Those are going to be topics that I'm going to include. Next week Sunday we're going to do this. If there are topics that you would like to see on this YouTube channel, make sure to comment that beneath, because all the feedback is more than helpful to establishing the channel that you like to see, and establishing that I'm doing what I'm doing as well and what I like to do. Now, in this update, we're going to look at the markets, and we can see that on the screen. We can see that I've got a range high and a range low. And I've got the theory that the ETF itself is a buy the rumor, sell the news event. I think that's pretty proven already, right? Since then, the markets are consolidating, which means that the markets are looking for a new equilibrium, or are looking for liquidity to move, or at least what's next? That's probably the big question, because an ETF in itself isn't going to move the markets in one go. It is going to move the markets in a longer window. And for that, I first need to move towards gold, and I'm doing that as a reference. Gold in itself had an approval of the Bitcoin ETF over here in March 2003. What does it say? It took more than 6 months to actually make new highs. But the actual impact of it the impact of it started to happen because there was a narrative that pushed the price of gold upwards during this period. I wasn't that active with the markets, but I think it's probably going to be uncertainty around the height of the debt levels in the world, money printed that goes on in 2008, through which the gold started to accelerate quite fast as a safe haven in terms of people were uncertain about their future. All those narratives started to happen, through which we have seen a case where the market started to rally heavily, and we've seen a case where the gold ETF actually accelerated the growth of gold in that way, because it's very easy to buy an ETF, sell an ETF, as it's a liquid instrument. And there are a few important parts of the previous sentences that you should be understanding. First of all, if there's going to be a big crisis at some point, gold also corrected, Bitcoin will do that as well, but it is actually a trigger and a narrative for Bitcoin to start moving forward or start accelerating even more. But that's all depending on the amount of debt there is, and if there is going to be deflation, and if the narrative actually pops up. Now, when we talk about the institutionals jumping into the markets, what they are looking for is a narrative of digital gold. And what is gold? Gold is hard money, which is scarce. And if you talk about being scarcity in itself, Bitcoin is even more scarce as the supply is going to be decreasing over time due to the halving. So as a matter of fact, I think that what we just witnessed with the price action of Bitcoin, and I'll just swap back towards it, the likelihood of the ETF started to increase based from the period in October. The machine started to go off. We had a fake move of the approval of Bitcoin through a news event with Cointelegraph saying that it was approved. That triggered everybody to actually get into the markets because they felt that if they are not and the approval is going to be happening, we would expect a pretty heavy move. And then all of a sudden people started to expect it in October, etc., etc. So the likelihood of the ETF started to increase from like 0% to 99% at the actual approval. What happens with the markets at that point is that the hype is taking over, and the hype is pricing in the actual approval in such a way that the actual event is getting overvalued in the short term and undervalued in the long term. And undervalued in the long term means that if what we see right now is that people say the ETF has failed because the price started to drop. But I think if you say that the ETF is failing because the price is moving, then you're looking at the wrong variables to decide whether or not it's a success or not. If the ETF is approved and the ETF is having a net inflow of 750 million USD, which is almost double as much as all the ETFs compared in 2023, I think you can say it's a success. But it is not reflected in price. But the question is it? Because if you look at the approval of the ETF, price is currently moving at $42,000 instead of 25. So the event in itself was super bullish for Bitcoin. There is a large amount of money being reflected into the actual markets at this point. And actually all the participants that wanted to get an ETF have been buying into the market. So it has seen a positive effect. But if you're looking at that small window of 1.5 weeks since the launch, yes, there is some sell pressure due to grayscale selling or GBTC or institutionals swapping their spot Bitcoin towards the Bitcoin ETF, which they couldn't be doing before the approval, but they can after the approval. And I completely understand institutionals jumping from an illiquid asset with a lot of regulatory risk into an asset that is actually liquid and regulatory approved, that is a tracker of the underlying asset. So I understand that. Which means that if you go further down the line with the cycle, with everything that's going to be happening, I think that the odds of having a longer cycle is technically going to increase. But I think that people have a certain desire to over and undervalue events in the wrong way. And this event has seen a correction. We are seeing one. We're going to talk about the technicals, but it's a super bullish one. Just like we are currently going to undervalue the halving in the terms of the event, in a way that the event is going to be approaching, probably price is going to go to 48 to 51k, which is not going to be the reflection of what the halving is going to be actually doing to the price. Because if you combine the two and we go back towards the digital gold version, Bitcoin is harder than gold, which means that the narrative for institutions to jump into a hard asset, they can choose whether it's going to be gold or Bitcoin. But because of the fact that there are ETFs right now, more will be allocating towards Bitcoin. Hence why, if there is going to be financial uncertainties in the coming years, which I think it is, it's going to push the price of Bitcoin even more. So we undervalue the actual halving based on the fact that we come out of an event that we price as failed or undervalued because it didn't do much after the event. Because of that, the halving is probably going to be undervalued, but the impact will be significant over a longer time frame. All right. So I hope that's completely clear. I'm just rambling a little bit, but I think that I've tried to explain everything that I wanted to do. Now, if you go into the markets and if you go back in time, I always like to do that. I've got some comments from people saying, yeah, but a 30% correction is not what we want to see. Now, if we go back in time, and the cycle that I would like to compare it with is the cycle that we've witnessed in 2016 and 2017, which is a very organic and healthy and natural bubble. In the end, everything is a bubble, but at least the price has been moving in a certain price pattern in which we have seen multiple crashes. 40% correction. Another one in between, which was 23. Another one in between, which was 40. Another one here, it's already the fourth one, which was 33%. Another one here, which was 33% as well. Another one here, which is 38. Final one here, which is 39. Then we had one in between, which was 28. And then the market started to turn around from a 43% correction towards, I think it was like 80 or 70% in a matter of 2 months. So we had 1, 2, 3, 4, 5, 6, 7, 8 corrections in the entire bull cycle after we started the bull cycle of more than 25% or 24%. In 2019, 2020, 2021, it's kind of different. We just had a few as well. We had a few very harsh ones. So, as a matter of fact, if we use this chart and we say, hey, we're going to have 30% corrections, if we go into the current cycle, we can see that we witnessed a 22% correction. We also witnessed one here, which was 21. We had a shorter in between. So, if we're going to use this data and we're going to look at the markets, I think that if we have a correction of anywhere between 20% to 40%, which is going to be a very hard one. I don't believe that we're going to have that one, but I mean 30% is a very natural price action, especially as Bitcoin in itself has been seeing such a big event and has been seeing a period of just upwards pressure resulting into a rally from 25k to 48k, which always needs to consolidate. The heavier the impulse, the longer the consolidation is, all right? So if you have such a push, you probably are going to stay in this period for a few months. Now, why did I decide to say 48k is going to be a certain level? Also based on the previous cycles. So in 2016, 2017, we rallied towards this Fibonacci level. And also because if we look at structures, we look into blocks. So this is a block of price action that we witnessed in, and that's based from this consolidation that we see here. Just like this block has been a resistance for a long time and might be at some point a retest. 30k is still open. I don't believe we're going to get there, but if we get there, I think the sentiment is going to be absolutely terrible. And it would be granting a lot of opportunities. But I think that if we are getting into a bull cycle, those obvious retests are not happening. Hence why I decided to use the information that I have of important levels to base that from the area that I have here. Which means if we're going to get a correction and we are consolidating into like ranges, then this is the range that I think we're going to move in. All right. So based on that fact, the lowest point that I think we can be is 33 to 35. Most optimal one would be that we hold above this order block that we've witnessed here. And that order block is a level of resistance that was a support during this period. That's becoming support again. And if we hold that, we can technically just consolidate, have a final halving run. So something like this. And then we go back, and then later in the year we start running out of this entire period and we start to have the upwards pattern. But it's going to take more time because there is more money involved. So it takes longer to have the actual bull cycle. This ain't going to happen, right? I don't believe that that is going to happen. But I think that if we go back in time, which is the period that we witnessed here, in which we are going to see a chart like this, which takes probably like 1.5 to 2 years, I would say, that's very likely that we're going to see it. Okay. So now what do we want to discuss more? we've had this week, or this resistance test, which came from March 2022, we rejected here. All right, we rejected it, and even more, we took the liquidity above this high. So we had been seeing a sweep, and then we reversed. Very normal. There's a lot of stop losses above this high, all taken, reversal taking place. Just as important as the fact that we have been looking at liquidity beneath these lows. So you can see this gap, which means that this is a level of support as there was a resistance. So this means that we're going to look at a case of a fact of a potential support. So this gap is the optimal area that I'm looking for potential entries. Okay, taking liquidity beneath these lows here is a trigger for a reversal, just like taking liquidity above these highs is a trigger for a reversal. And then what? Well, probably there's not enough strength to break through this resistance in one go. Probably the halving is going to push the markets for a little bit, but then it's over. So that means that if we get in this zone, you might be wanting to take some profits. If we're getting in the regions of sub 41k to at least like 36k, that's the period where you want to accumulate your positions, being ready for the bull run that is yet to come. Thank you very much for watching. Tomorrow I'll be back with an altcoin update. Make sure to subscribe, and I'll see you again soon. Ciao.